afternoon, traders, and welcome to today's daily market review. It is Thursday, the 23rd of July 2015, and today we're going to be looking at the FTSE 100 stock Marks and Spencers. Now, since the 17th of October 2014 up until the 29th of May 2015, Marks and Spencers has been in a steady uptrend. Now, since in and around the 29th of May, we've seen a correction to the stock price, and in recent weeks this has been attributed to the resignation of John Dixon, who was the former head of the general merchandise. Now, from a technical standpoint, we're going to take a look at where Marks and Spencer is in the Elliott wave count, and then also have a look at where we expect future prices to go. So in terms of our Elliott wave count, we can see that we have three clear waves to the upside. So we have wave 1, wave 2, wave 3, and then we are currently entering wave 4. Now, just like with wave 2, where we can see it broke down into 3 distinct waves, we expect the same for wave 4. So we're going to dial down into the daily time frame so we can clearly see the breakdown of the price action. So on the daily time frame, we can clearly see again the 3 waves to the upside. And if we take a look at wave 2, we can see that we have a ABC pattern. And generally with wave 4, we generally get one of two things. We'll either get a complex correction, which generally looks like a consolidation zone, which generally will be extended or last longer than wave 2, or we simply get a repeat of the former, and it will break down into 3 distinct waves. Now in this case, we're expecting a ABC pattern, and we can see from our price action in terms of our Fibonacci cluster zones, where we have 2 distinct zones. Our first at 522.44 and 520.05. Our second at 512.13 and 506. Now, the BC leg of the ABC pattern has already entered into our first zone at 524.44, 520.05. And then we had a small bounce from this area. Now, for those of you that are regular to the daily market review, what we typically do is once we see price action enter into our zone, we will generally look for some type of future support or resistance to the rally or the downtrend, where we will look to manage our trades and trail our stops. Now in this case, we saw an initial bounce, and if I drop down to the 60-minute chart, we can see that we had a rally of around 31.5 points. So from the low of 518 up until 549. Now since this time, we're starting to see a decline back into the first zone. So in terms of where we expect the future prices to go, the momentum on the weekly time frame is oversold. So in terms of the next few weeks, we expect the market to be sideways to up. But on the daily time frame, the momentum is still bearish, so we're still going to be looking for some further downside in terms of the price action. Now, the 100% projection, price projection of the A leg projected from the B comes in our second zone. Now, for those of you who trade ABC patterns, you will know that the 100% price range of the A leg is generally a high probability area for where the future price action may reverse. Now, this has been backed up with an external retracement, an internal retracement, and also a projection of the second wave. Okay, so we have a clustering of around 6 Fibonacci ratios, which has formed our second zone, and again this includes the high probability 100% projection of the A leg. Now, the fact that we're expecting price action to be sideways to down according to the momentum, means that the second zone is where we expect prices to go, and then we can expect some kind of reversal to the upside. Now, in terms of our time windows, we initially had a time window from Wednesday the 24th of June up until the 2nd of July. We didn't really see any reaction around this point, but the price action hadn't reached our price zones. Okay, so what we typically want to do is, once we've identified a time window, we then want to see price action enter into our price zone, and then once this has happened, we will then look towards time, and then once the two have correlated, we will then look for some kind of entry trigger on a lower time frame, and then a entry into our trade. So the market then entered into our first time zone, and this correlated with our second time window, which was from Monday the 6th of July up until Wednesday the 8th of July. And from this point, once we had time and price together, we saw the initial bounce up into our level of resistance, and then we've seen the market turn. And again, where you can see the market turn from our identified level of resistance, this is the reason why, one, we identify these levels, and two, we will manage our stops accordingly, because once you get a bounce, it doesn't necessarily mean that the market is going to continue to your price targets. The market could quite easily reverse and stop you out of your position. Now, the most frustrating thing that can happen to a trader is when they initially entered a trade in the right direction, the market moves a little bit, comes back, stops them out, and then reverses and continues in your original direction. So always manage your stops, always look to identify future levels of support or resistance where you can manage your levels, and just always be aware that the market can always turn and take you out. Okay, so in terms of the entry, we're going to be looking towards the 4 hourly time frame, as our 60 has already triggered, and again we're going to be looking for a cross of the two moving averages. We generally use the 34 and 8 here at Trade Simple Trade Smart, and then we're going to be looking for the taken out or the violation of a swing high. So all in all, we're going to be looking for a further downside into the area of around 512.13 to 506. And then once we hit this level, we're going to be looking for a moving average cross and the taken out of a swing high on our 4 hourly chart. And in terms of our targets, we're going to be looking towards the 1.272 and the 1.618 external retracement of the entire ABC pattern. Okay, so in terms of our targets, again we apply Fibonacci ratios to the patterns, and this will give us our target. So at a minimum, we're going to be applying the 1.272 and the 1.618 to the ABC pattern, our wave 4, and we're going to be looking for a target of 622 spot 3 to 650 spot 68.